Hi everybody. You will see an example of adaptation at work. I have hearing aids and I'm not allowed apparently to have, that type of microphone to spare your ears from microphony. No acceptation from me today, just the basic adaptation. So I will be talking today about open banking and what this means, and I will split the presentation in two. First, I will be very specific and factual about what this open banking means and what it means for us people outside banking who try to do something in this domain. And then I will put it in the context of banking architecture. Before doing this, I have to tell you something or a bit about myself. I'm not so famous as the other presenters here. Which is a bit tough, I had to find an honest reason why the hell I'm here, when all these guys are so fabulous. And the only honest reason I could find is that I spent almost 15 years in financial services industry, not as a banker, but as an individual doing technical stuff and at some point advising banks. And I realized by chance that the knowledge that I have accumulated is useful to others, especially to others who want to build cool stuff. So I would be very happy if from what I would tell you, you would find something useful. So yeah, let's start. This is a screenshot from an article which appeared last month on a blog of a startup called Revolut. It's a startup that I admire. They do a good job. And they said, you must have been living under a rock if you haven't heard about what is happening this month in banking. It happens that a research company ran a questionnaire in UK, and 93% of the people didn't hear about this thing. So it seems that we have been all living under a big mountain. So the thing they are talking about here, it's called PSD2. Which is Payment Services Directive II, an European regulation. So I said, okay, if these people didn't hear, if nobody has heard about the changes coming, I was curious what the banks announced about this. So I went and searched on each bank website trying to see what they announced. And I found some blurbs like this, which seem to come from Wardley's blah blah strategy generation. Open banking is designed to increase innovation, competition. You will see all your accounts in one place. You'll be able to make payments from one account. Why this would be so exciting, or what this really means, not clear. So I came across things like that, and I thought nobody would figure out what this means, I went back to Revolut and I said, maybe they explain it better. And they said, PSD purpose is to promote innovation, again, improve security of online payments and create competition. What the customers could possibly understand from this, what's in it for them and what they are supposed to do differently. So I think it's necessary, before talking about the concept, to clarify what each of them means, because they are used interchangeably, even in the industry. And it's very important for you, especially if you try to do practical stuff, in which framework you are placing yourself. So are you solving a PSD2 problem, an open banking problem with capital letters, or not with capital letters? So PSD2, it's an European regulation. It applies to all the European banks. And its intention is to, so it has many intentions. It's a 300 pages document, but among others introduces new players on the market. So until now in financial services, you usually had to be a bank to be able to do retail banking. But now they introduce other sort of players, which is a big change. Open banking, on the other side, with capital letters, it's actually a legal entity. It was created in UK at the initiative of a regulator, which is a competition commission. more precisely, the competition authority, basically. And in this legal entity, they invited 9 banks out of UK. I didn't know we have 9 banks, because usually, I mean, all you see, there are 4. So the other 5 are pretty tiny by comparison. So they invited these 9 banks, and they said, you know what, you are responsible to define the standards for the APIs in order to enable this type of communication with the new players who will appear on the market. Okay, good. When people talk about open banking, though, with not with capital letters, especially in fintech conferences and so on, they refer to a much wider set of possibilities. And this would be what people have in mind usually is a situation where banks are disintermediated completely from the customers. They are becoming sort of pipes to the rest of the ecosystem, which is serving directly in a more granular way the customers. So I will explain you how all these came to be interconnected. I will show you a bit of history. It's a bit, let's say, boring, but if you know the facts, you will be able to immediately place an article or a discourse or a conversation, actually what people are talking about. So I don't have a pointer, and I know anyway that some people don't see the colors of the pointers. So I'll explain what on that side. So on the verticals, I put the entities which are involved in this movement, and on the horizontal up there is the timeline, yeah? And the alternate white, yellow lines segregate types of entities and their actions and responsibilities. So starting from up, corner, we have European Commission, which published, thank you. We have the European Commission, which published the PSD2 regulation in December 2015. It enters in force 1 month later, and in 24 months, meaning January 2018 here, was the deadline for transposition of PSD2 into national law, which means in all the countries from European Union, this important regulation should have been made a national law last month. 13th of January was the deadline. However, part of the directive were a set of technical standards. It's not what you expect if you expect technical standards. So they mandated European Banking Authority to define these technical standards. How are we supposed to communicate in a secure way with third parties as banks, yeah? And so here is European Banking Authority. They were supposed to release the technical standard in January 2017. However, they were released as final standards in November 17. And these standards will be ratified soon by European Parliament. And from that moment, February 2018, in 18 months, they will be applicable, yeah? So we are in a weird situation where the regulation is in place, yeah? So from January 2017, but we do not have the technical standards for applicability. They will come in place in July 2019. What happened in UK, though, that we ended up with an open banking thing connected to this regulation, was that the Competition and Market Authority here published around the same time as European Commission a document called Banking Remedies. And there were a number of areas they wanted to address, but one of them was this one called open banking. Knowing that new entities will come into place. So they set up this entity, open banking entity, and they mandated to release to define the standards for a number of APIs, which they did. So first stage was in March 2017, and they released the so-called open data APIs. Not something fabulous, but I think they wanted to test how banks react to that. And these were basically locations for ATM branches and catalog of products, something very, very, very basic and very simple. On the same date, with the PSD2 entering in force, meaning 13th of January 2018, was the deadline for what we call in UK read-write APIs in the banking world, which is what many people refer to as open banking. What banks to do in this need to do in this context, it depends on where we are, in which country we are. So in UK, they had to react to the UK regulation, and they had to come up with these APIs, even if PSD2, with its whatever technical representation, will come in force only much later. So, as you have seen from the previous screens, HSBC talks about open banking, while a startup talks about PSD2. Actually, what they usually refer to are this type of APIs that I will tell you a bit more about. So that's the history of it, and probably that's all what you need to know about how these things are connected together. So what PSD2 will bring to our world? So it extends the scope massively compared to previous directives, in the terms that all the transactions, almost all the transactions, will have to comply with the other set of requirements. So we split the transactions by 2 by 2, as Wardled said, to simplify things, geographical scope and currency scope. So EU or non-EU currency and EU or not EU country. So a transaction would have 2 legs if both the receiver and the payer are in EU, and 1 leg if they are not in EU. So before, the scope of European regulation would go around this 2 legs transactions with European currencies. Now, for example, if you have a currency, a transaction, a payment from UK to USA in USD, it will be in the scope of the regulation, and I'll explain you later on what you need to do about such a transaction. It's mainly about transparency, what the bank needs to provide for such a transaction. The transparencies that I mentioned refers to execution time, exchange rate, breakdown charges. So when from the implementation forwards, you will be able to see in your transactions more information about where your payment is, how much you're charged, and what for. The regulation will also include other types of networks which were not included before, like all sorts of mobile payments and so-called limited networks like gift cards, fuel cards, store cards, and so on. This is the most interesting part of PSD2, and this is what it shares with the open banking, and it's the introduction of the third-party providers. So the third-party providers are 2 types for now. I believe more types will be allowed, or these types will be allowed to do more things, but I guess for now it was safe to enable these 2. So one type is Payment Initiator Service Provider. They are called PISP. I will spare you this type of abbreviation. I will call them Payment Initiators for the rest of the presentation. Or Account Information Service Provider. And these guys are actually allowed to receive transactions and from banks and aggregate them or analyze them and so on. All these third parties need to register with a national regulator. So each country, by law, will have to appoint an authority which will be responsible for the registration of third parties. However, watching what's happening in the UK, the registration is pretty straightforward. So they don't make it really crazy. The most important part, and probably controversial from any point of view, there are no contractual relationships between the banks and the third parties. So in my experience, when third parties from the fintech world had a proposition and they wanted to integrate with the bank was in a position of power, and they could say, sorry, no, and the model will be dead. Doesn't matter how good or how necessary it was. So because now the third parties are not required to enter in a contractual relationship, basically the market, I believe, will move quite fast and in an interesting way. Also quite controversial is what PSD2 required in terms of security. Actually, nobody is sure anymore. Apparently, it was supposed to be clarified in the technical standards. I invite you to read them, 30 pages, it feels like chewing cardboard. You will not understand what you are required or allowed to do. So I would probably recommend to follow lawyer blogs around this topic, because they usually clarify the thing. So in essence, the bank is obliged to offer the authentication services to the third-party providers, and third-party providers have to go through the authentication procedures of the bank. The banks are not allowed to make any discrimination between their payment, the payments originating from the bank, or the payments originating from third parties. The banks have, however, a big responsibility and a burden, and I don't know how exactly they will do it. It's not precisely described what is required of them. It's called transaction risk analysis. In this scenario, banks are required to be able to show the nature of a transaction, to detail analyze it. If it's a fraudulent transaction, the bank has to prove where it happened, how it happened. The third party has no responsibility until the bank proves that it was their fault. So that was a very brief scan of what PSD2 does in terms, focusing only on this angle of open banking, or enabling the interaction between third parties and the banks. In terms of open banking UK as an entity, so as I mentioned before, open data APIs were released in July, and these new ones, account information and payment initiation, some of them for some banks were released now in January. If you want to look at the standards, I put the link there, so you will find the standards for these APIs and for these ones as well. However, open banking is not the only institution defining standards for around PSD2. So please have a look. There are at least 4 I am aware of. So Open Banking UK, Berlin Group, which comprises a group of 40 banks trying to define these standards. There is another one for France and Belgium, STET, and there are some Polish APIs. Have a look at all of them, see what affects you, which market you are in, and how it helps you. I wouldn't go in detail through this comparison now, but you can find quite very good articles on this on Finextra if you Google for Berlin Group and Finextra. So now, when we think about regulation, we have the impression that it's mandatory and everybody will do something about it. But the last time I checked, at the deadline time, only a few countries responded to the regulation and transposed the regulation in their national law. All the others here on the right-hand side did not communicate the measures for transposition to the European Commission. So it's a process still ongoing. What about UK? Because UK had a hard deadline, because open banking was an additional requirement. So out of all 9 banks, only 4 announced that they will be ready, only 3 were ready, and by now, so 3 weeks afterwards, or I don't know how many, only 1 third party and 1 bank established a connection. I have no idea why it's going at this stage so slow, and I didn't have the information I wanted in the past 3 weeks in order to give you more precise information. However, here are the third parties which have registered with the FCA, which is a Financial Conduct Authority in UK. So that national authority responsible for third parties. If you have ideas or you want to check your ideas against others, it's a good place to start, to look in the registers, national registers, see what companies have registered and have been authorized, see what type of model they have, what they do, in which countries, and so on. I will show you a few examples of third parties or models of third parties. Calgary is still work in progress, but I think it's representative from one point of view. They focus on a niche set of customers, which are older people, which have very specific needs in terms of digital applications. And they're very exposed to fraud. So if this application is able to get the transactions of this type of population, analyze the pattern, see individual patterns for spending, they are able to either inform them or inform their relatives of things out of pattern. Because this is work in progress yet, I haven't seen it working. I just wanted to give you the idea of, focusing on a niche customer. Others, so this is working. The application is called Bud, and I have many friends who use it in UK. It's used basically by allowing the entity to have your user and password, which is not what is intended. So it's not an application of PSD2 as intended. But what this application does, it allows you to connect from a very long list of financial institutions to select the one that you use, bring them all in one place, so kind of have a one view of your financial life. So in this image, the customer selected American Express, Barclays, First Direct, HSBC, and Zopa, which is a P2P loan provider. Another example is, and it's tiny, but it's very much appreciated on the UK market. So it's Sterling Bank, which is a challenger bank, and they do a very good job in UK. And they have a partnership with a company called Flux. So Sterling does the banking stuff, and Flux does the tiny bit. So they they put together partnerships with networks of shops. So this Eat is a network of shops where you can buy sandwiches and coffee. They integrate this into the banking system so that you get also the receipt in the statement. You probably would say, why would I want to know that I bought a sandwich and the coffee in it? Yeah, maybe, but if this is applied to larger supermarkets where you spend on a wide variety of goods, it helps you categorize your expenses in an easy way. So this is different because it initiated from the bank. So it's not a third party, which attached itself to the bank. Outside in, this is what many people refer to as open banking. So any tiny improvement in the banking experience usually goes under the umbrella of open banking with small letters. So Tide also is a company It's a startup, and they do a very good job for small and medium enterprises in UK. This is an underserved sector in UK. They have a particularly bad experience with banking. So Tide set up this application where you can have a banking account for your company almost instantly. They connect with the usual or expected entities like Companies House to certify that you are who you are, you own this company, you have the right to open an account, and so on. So this is an integration between an example of integration between Tide and Company House. They also integrate with accounting software, which is very interesting because they offer entrepreneurs an integrated view of their financial life. Yeah, so they don't want to move, oh, this is my accounting, this is my bank, and so on. So it's a good example of what financial life could be. So going back to to these definitions and knowing now a bit more about PSD2 and open banking, if we look at this definition, so now we understand that indeed they talk about open banking because they talk about competition, and the initiative was set up by the Competition Commission. So seeing your account in one place refers to the fact that the API for transactions, for banking transactions, would allow you to see all your accounts in one place. Now, this refers to current account. I just have one current account, but apparently many people have many current accounts. So this would allow you to bring all your current accounts in one place. Also, the interesting bit, the other API for the payment initiator would allow you to make payments directly from your current account from some online retailers. So what this means, these third-party providers, the payment initiators, will be able to allow from their application to initiate a payment from your current account, use your permission, of course. So you will not use the credit card, you will not use a debit card, the payment will be directly from the account. In many cases, people think, oh, these third-party players will be, payment providers and so on. I don't necessarily think so. I think this will be used kind of to create a seamless experience in all sorts of journeys which end up with payment, and you don't want to have the hassle to type all sorts of things. So if we look at Revolut definition, promote innovation, improve security of online payments, create competition. Still, you almost have the impression that we are not talking about the same thing, and it's a pity because they do quite well what they do. So what now? What I hope will happen? So I hope that now that the regulators allow the creation of new third-party providers without, shooting you down in a few months, more people will who have ideas will be able to implement them. So the procedure, by watching other startups going through the registration in UK, is to identify who is a national authority in your country, what is the procedure which is published in their register. Usually they are very simple steps and they come from the PSD2 regulation, so they don't normally vary by country. Check the other registers, see what business models are out there, see, sometimes from one market to another market, you don't even have to invent new things, you just have to bring a good idea to a market. And I hope this will happen. Very importantly, check what standards apply to your country, because unfortunately, the regulator didn't go in the best way about establishing standards. So you will see in each country all sorts of things. You would probably prefer the API from UK, but you can use them only with the UK banks. And then you register with the banks as well. But this is also quite straightforward procedures. So All these entities and all these open banking initiatives stays on the top of the banking architecture, and many say, oh, it will disintermediate completely the customer from the bank, and banks will become pipes. Knowing banks from the inside, I know that they are not pipes, and for many reasons, and that's a different discussion. But I wanted to state this quite clearly, that the infrastructure under this label, or under this level of interaction with the customers, is not as solid, as fluid, and as resilient and as we might be led to believe. So take this in consideration if you want to do a startup or a business model. So this is a very or extremely simplified version of a banking architecture. What I want to emphasize here is that open banking actually joins the level of the channels in banking. So banks' channels of interaction with their customers evolved over the years, from branches to ATMs to telephony centers to online banking to mobile banking. And while they enable these channels to happen, the rest underneath remained unchanged. So there is a lot of sellotape, to enable this perception on top that things are connected. So open banking will become, or the entities appearing there, will become a sort of a new channel for banking, for doing stuff. So at the moment, they are not allowed to sell financial products, but I think things will go that way. So where the data for open banking lives, yeah? So what are you consuming? The data for open banking actually lives in a set of applications which are called core banking platforms. Each bank has a wide number of platforms, from 30 probably to 70, the largest of them. And they are separate by bank and by product. And you find, especially for current accounts in UK, they are over 40 years old, sometimes well over 40 years old, which creates a whole lot of problems. It means that they cannot represent the reality of the financial transactions as we have them nowadays, and so on. The point is, no bank has opened those systems themselves to the world. It was not technically possible, and they were way too afraid to do this. So what you usually have is a system aside of these core banking products, somewhere here, a sort of a real-time database which created the impression that you have access to this system. Also, the payment initiators, actually what happens in a payment, many things could happen depending on the method, but always they have to check the balance of an account from which you are allowed to pay, which is typically a current account. So they need to go here, check, do you have £100? Yes, you have £100, and so on. So there is a lot of interaction at that level, and there are many levels of protections in banking, so not to bring these systems on their knees. When I looked at, because I worked many years as a consultant, so not an employee of a bank, but doing systems for banks, I've seen the architecture of most, and I would say they have the same problems, the same structure. Yeah, maybe one of them has 3,000 systems and another one has 15,000 systems, but essentially we can structure them in the same way. I represent these banks as vertical lines. So here on the left, these are the 4 big banks in UK, and they have almost the equal market share. And for years, when startups try to come up with new ideas and come to banks and say, look, what if we work together and we do this, they simply couldn't integrate because the integration should have happened at core banking level. And I tell you this from practical experience, because I either worked with the startups who wanted to do this, or I worked in so-called bank innovation for many years, trying to achieve this type of integration, and it didn't work. In UK, this led to the apparition of so-called challenger banks, which are Starling, Monzo, Atom, Tandem. Monzo and Starling are the best of ones in my view. What this means? It means that they also built the whole stack, as I showed it to you in the previous slide. Yeah, so they each have their own core banking systems, and underneath they have all the finance, accounting, and treasury, and whatever is needed to manage a bank. This is a very costly exercise, and normally you don't make money from current accounts. Nobody does. So the bet is a long-term bet that they will be successful in what they do, and they will manage to extend to other products. What I think will happen, though, when I looked at the market, is that the market will fragment somehow. So we will move from these horizontal lines to from vertical lines to horizontal lines. And I'll explain, for the rest of the presentation, I explain how this could happen, yeah? So if for the moment it's a hypothesis based only on my observations for my years in banking. So what we see at the moment under the open banking and PSD2 are a set of entities which sit at the top of the banking world, the visible part. I don't think we will be only startups and so on. I think there will be big retailers. I think any other major platform can do this type of connection and do that type of service. Underneath, we will see transaction processing type of entities, which could be technology companies specialized at just doing this, you know. Core banking, it's in fact a big log. The biggest functionality is the trust we all have in the timestamp for the transaction there. And the underneath part, the last part, which is really the banking world, is the ability to manage capital and take actions on the market as an entity. This is quite the complex stuff, and is not yet touched by the world of innovation, even if probably is the most dangerous for us all, and is the most in need of improvement. When I came up with that idea, not idea, it was just an observation. It was like, this is what I see happening. I was reading a book, and the book was Only the Paranoid Survive. I was not sure about the paranoid thing. Only the Paranoid Survived. It was written by Andrew Grove, who was a CEO of Intel many years ago. So in his book, he explained Intel, how they ended up doing what they're doing. And I came across this picture, which struck me because I thought, but this is happening now. This is happening now in banking. And he was saying, you know, in '85, we have four big players in personal computing industry. And until '95, it was a transition which somehow you couldn't see it if you were quite in it, when the personal computers broke down into pieces and you had these horizontal sub-industries being formed. So you had the microprocessors, you had the operating system, you had specialized companies selling, you had specialized companies doing hardware, and in a way, this is what is happening now in banking. And I think what is different from these two worlds, which are obviously very different, banking is regulated, so it doesn't react necessarily to the market forces. That's one difference. And another difference is the knowledge from banking somehow doesn't aggregate outside banking in the same way as the knowledge about computers aggregated. I think it's a different set of people or whatever, but what I see now more and more are people extremely knowledgeable from banking, leaving the traditional banking world, setting up shop and saying, I want to build this, and I want to build it better, and I want to do this thing, which banks do, but you know, we do it independently. So I think there are chances that this is happening because also the regulator wants to break things down. So they understand the risks that the banks put on the countries and on the societies. So they are afraid what the next thing happening. So I would like to take you a bit of a journey of how I would like to go around this problem to figure out where the banking goes. So when I was thinking about that problem, I had a fellowship from a venture capital company, go think about this stuff and tell us what you think. So I wrote a paper, which you can find on the internet if you want. It's called The Ripple of Core Banking. It's very much about core banking. But when I published that, which I thought it's a very dry, kind of paper about the belly of the bank, I had many reactions from absolutely unexpected places. And I was contacted by a professor from University of Washington, a professor of financial regulation, and she said, I didn't know this is in the bank, but I can tell you what regulation created that stuff. And for me as a designer of system, that was fabulous, because I couldn't understand how we ended up with this Gordian knot. So I still work with her. But another person who contacted me was a professor from London School of Economics, and he said, this thing that you observed, it has been studied before. And he sent me a long list of articles and books. And I was not in academia when this happened, and it surprised me that people who reacted the most to this were people who look at patterns for a life, You go in a bank and you tell whoever that the bank is modularizing, and they look at you, are you crazy? What are you talking about? But anyway, so diligently I went through the method that this professor sent me. So the authors that he mentioned as, having studied modularization. And I came across a book, Design Structure Matrix, which it's a method actually very much used in manufacturing in order to determine how to group together functionality in a product. And I found it interesting. So in this method, you put on the vertical and on the horizontal the functionality that you need to happen in those products. And then you map how these things need each other. So if one function communicates heavily with five other functions, probably they should be in the same piece. So this is this scheme is for a jet engine. So you see modules forming and clustering, which I thought, that's interesting. I can do this for banking because I know what things happen and where, even if probably it will be, there will be a set of things like that. So this method has been used in a book called Design Rules, The Power of Modularity. The authors are Harvard economists, and they analyze the personal computer industry. So they are the authors I was referred to. Of course, it's easier when you analyze retrospectively, so you can map things, okay, this happened. So this scheme here is a design matrix for the description of the computer from the original paper of van Neumann. So they start their research from van Neumann paper, and they look at the evolution of personal computer up to 95. The book is very interesting, and if I were to recommend you to read something, either the PSD2 regulation or this one, in order to understand banking more, I would recommend you to read this one because it has longer life, and it gives you a better understanding. So, according to these authors, Baldwin and Clark, modularity is a particular design structure in which parameters and tasks are interdependent within units and independent across them. So they insist a lot on establishing design rules which apply for the whole thing, and then where do you sever the connection so you don't create extreme friction, but on the opposite, you create you create options. So they come up with 4 operators. They say that modules have, like chess pieces, they have the ability to move in certain ways. And these modules are splitting, substitution, augmentation, exclusion, inversion, and porting. They are extensively described in this book, but you can intuitively grasp what they are. You have a design, or you think you have to deliver this. Where do you split it in 2? Okay, after splitting, the design could evolve, and you replace this piece with another one. That's substitution. Augmentation would be adding a new function, which probably leads to exaptation. And so on and so on. What I like about this method, which I explored to see where it leads me, is the fact that they take every method, that they look historically how it was applied, how company took the decision to apply one of them. So for example, they look at DEC, and they say DEC was going only by exclusion. They went and delivered almost bare machines, and they throw value in this because other people could build on them whatever they needed. So they take each type of operator, and they use a theory from finance, which is the evaluation of real options, and they are able to somehow evaluate this type of movements. So what a split is made of, what augmentation is made of, come up with a value, and then in aggregate, if you combine this type of movements, they basically look at the evaluation of a portfolio of options. They of course, think, or it's very much in the thread of this conference, they think of evolution. So this operation, of the module, lead to an evolution of the design, which they compare with the genetic evolution, which has its own operators. So while in genetic evolution you look for fitness, here, and I would say probably it's quite a simplistic assumption, the value will be given by a developed capital market, which would put value on that thing. They go further in their analysis, and they end up with the industry evolution. So this is coming back to banking. From these modules that we see separating and evolving and substituting and splitting and so on, basically the industry where this is happening is changing, and there are ways of observing how this is changing. Here, in the book, they followed historically how the personal computer industry evolved and what sub-industries appeared. So this would be the horizontals that I was mentioning, in the equivalent of horizontals that I was mentioning in banking. There were many industries which didn't even exist or had one player, which was probably IBM, in that category. So in the graphical part of on the right-hand side, the last piece on the graph, the light blue one, is IBM. And the size of it there, so IBM is a company, but the rest are industries. They are industry codes. And this has happened for 40 years in this way. So but things have evolved, and would we be able to trace to where we are now, this map will look absolutely different. So, at the end of my presentation, what I would like to leave you with, these modules appear. I do see them. I do work with companies like that. So if you have ideas, if you have knowledge from your extensive experience, take it seriously. It's valuable. banks don't have it, unfortunately. They dismiss the knowledge they had, and through the operational procedures, unfortunately, they cannot rely on their own knowledge. So your knowledge is powerful. If you want to do something, I think there is a chance to succeed. So thank you very much.